difficult because it doesn't find mention in your annual report. Has that plan also been laid to rest?
Shireen,
I know it's an aspirational plan, it's an aspirational target, but are you not going to talk about it anymore?
you know, on the flight over, I was thinking about 3 years ago. On the 12th of June, it's going to be 3 years. And I was remembering that time and what it was like, and it's the nature of the human brain that we forget these things. But if you go back and see what it was like, at the time there was a deep sense of anxiety in the company. There was a sense of, there was a very high attrition. The growth was a fraction of the growth of the industry. And in this climate, after studying what was happening for a 2 or 3 months, in the October board meeting that year, I presented this ambition, this aspiration that let us go after 20 billion, 30% margin, and $80,000 by 2020. It was a, you put this, you stick this out there, you know, paint it onto the sky.
No, I get that, but are you no longer holding that target?
It is, I mean, over the last year, it somehow got linked because of my compensation and so forth. So that, there are two parts to that. The 20 billion, 30%, 80,000, this is a very concise way to capture what needs to be done with the company, with the strategy.
So you're sticking with it?
We are sticking with it, but the 2020 is almost impossible.
Yes, it is.
And so this is how the board decides what to do with the compensation trajectories and all of that. This is up to them. Realistically, first of all, to investors, to the financial community, we have never said that this is a goal. This was always an aspiration to sort of rally the company around something aspirational and so on. But if you look underneath that, you know, I talk about the new and the renew, the software and the services, the automation and the innovation. Ultimately, the way to capture all of that is that rapid growth to 20 billion, that we have that ability to get there organically, largely organically. 30% margin, which means that we will not sacrifice margins to get there. In fact, we believe that we can improve the margins to get there by bringing in an element of non-linearity and software and so on. And 80,000, which means that we want to augment people with software so that we amplify their abilities and improve the revenue per FTE. And in fact, if you look at our revenue per FTE, it has gone up to around 51.7 thousand from where I started, around 50,000. So it is going up, whereas the rest of the industry is going down because of what is happening. So sticking with the numbers, 2020 almost certainly is not going to happen.
So if not 2020, are you putting out a new timeline?
2024 and a half.
2024 and a half. Okay.
I'm joking.
I know you're joking. No, but seriously, let me ask you. You know, who knows what happens in 2024? But let me ask you more immediate concerns. Praveen spoke, and he spoke about how the run side of the business is seeing extreme amount of pressure, and this is not a new phenomena. It's been going on for a while now. Taking out of costs from the run side of the business, he said pricing pressure at this point in time is as was. Nothing has changed dramatically on that front. What kind of risks are you seeing now as the run side of the business becomes even more commoditized?
It is, this is something that I've been talking about for the last 3 years. The entire industry is seeing this. There's nothing new in what Praveen has said. I don't know why again it got overblown in such a big way. This is just the reality of our industry. In fact, it is the reality of any commoditizing industry that there comes a pricing pressure. Now, if you look at our world of managing enterprise software landscapes, the parts where you maintain, operate, run systems and applications and processes, this part is under commoditization pressure. There is a lot of automation that can already be done there, and this is already known to all of us. And then there is the new part, which is the transformational part, the build part. And that is where there is a tremendous opportunity because the world is being rewritten with software, and when you build this new software, that is a high value, high margin area. Roughly speaking, we have 65% of our workforce working on 55% of our revenue. And this is the part that is growing. It is still growing, but it is growing slower, and the margins are lower than the rest of the company, whereas 35% of our workforce and produce 45% of our revenue at a much higher revenue per employee and much higher margins. And within that area, we have the 25 new services that we have started in the last 2.5 years, which are seeing incredible growth. So, and similarly the software. Our software has grown significantly. It has grown way faster than the company. and the revenue per employee there is much faster than the company. We'll start to reveal these numbers in detail starting the first quarter of this year.
But just if I could ask you to just bear with me, give me a sense on the back of the visibility that you currently have. FY18 operating margin guidance between 23 and 25%, growth guidance at 6.5 to 8.5%. Do you feel that are you seeing traction enough that you'll be able to get to the higher end, the upper end of the margin guidance, or do you believe that you
are? It's
too
early to tell because we are just 2 months into the year. As we see better, we will obviously share that with the markets. So far, we are sticking to the numbers. We feel very comfortable with the 6.5 to 8.5 range. I think given the circumstances and the 23 to 25 and the. We were at 24 to 25 earlier, and we have taken that lower end to 23 to 25 now, and that is because of several factors like the currency, and the currency itself has a big impact on that, and this the U.S. hiring and all of these things all together factor in there. We believe in consistent profitable growth. We believe in ensuring a very tight discipline on the margins. I believe that is the right way for us to operate the company, and that trade-off that if we were to go lower on margin, that we could somehow do better thing. I don't believe in that. So we are all about ensuring that we will have consistent profitable growth at high margins, and for now we see 23 to 25, but our endeavor is to ensure through disproportionate growth in the new areas and disproportionate growth in software to beat that trend.
So no go slow on acquisitions, or continue to go slow on acquisitions given the kind of environment that you're in?
Be very, very purposeful about acquisitions. Acquisitions don't come naturally to us. They don't come naturally generally to the industry. So you want to make sure that I have a very strict principle of ensuring that we don't buy yesterday's companies and technologies. We don't buy market share or revenue growth, but we buy things of tomorrow, ideas of tomorrow, and where there is a very deep spiritual alignment and alignment of purpose in what we are doing compared to what the future needs. And this is why we did Panayan's company. Those companies are not cheap. They are not. They are rare. So therefore, it takes time. But you will see us do acquisitions. We did. We bought this little company, Skytree, is a great example in the last couple of months, and we will do more.
You're talking about purpose. You're here at EY. We're talking about dealing with uncertainty and building organizations with a purpose. Do you believe that the purpose that you set out for yourself at Infosys when you joined 3 years ago, you're going to turn 3 in exactly what on
2
the 12th
days,
in 2 days? Is that purpose still intact? Do you believe that you've been able to reinforce it? Are you veering away from what you thought your purpose was?
Transformations are very difficult, especially if you look at the traditional sort of script for transformation. You have a cash cow legacy business that is high margin, that you squeeze for savings and then use that to fund the new business, which is low margin. In our case, it is the other way around. The new businesses are high margin, high value businesses. The traditional business is the one that is under margin pressure, and so the normal script doesn't apply. There is only one way out of this, Shireen. We have to bring automation to the work of yesterday, and we have to bring innovation to the work of tomorrow. There is no other way, and this is my message here as well. And we have to create a culture of innovation. We have to create a culture of grassroots innovation.
But do you still have appetite, given everything that's happened over the past 3 years, or actually specifically over the last few months, do you still have appetite for this big transformation? Because it requires a lot of effort.
It requires a lot of effort.
Time, blood, sweat, and tears.
It's the other way around. It's the only thing that keeps me going. When I see what the youngsters do on the flight over, whenever I need to feel better, I open up the zero distance report. I get one every month. And I was just telling Mark about this. On the flight over, I have a list of around 400 or so really extraordinary project managers. And I was looking at what projects do we have where the largest number of these extraordinary project managers work. And I found one working for a large company in the northeastern United States, an insurance company. And I was looking at their work, and it was amazing. They solved a really unique problem The amount of pharmacy data that comes into their claims processing system had lots of errors, and they figured out a way to completely eliminate these errors outside of the process, so it was totally non-disruptive. It was beautiful, the work that they did. And I was wondering, I have 6 people on this particular one who are the stars, and what have they done? And they did something so amazing. I haven't had a chance to even talk to them yet. Now they are watching this on CNBC.
On CNBC, so now they know.
So now they know. But this kind of a thing really makes it all worthwhile. I absolutely love that.
Well, we hope that you continue to love what you do, and we wish you the very best of luck, and congratulations on completing 3 years as well, and for the transformational journey that you've decided to undertake.
Yeah, absolutely. Thank you so much, Shireen. And that entrepreneurship, that innovation, that spirit of 1 billion entrepreneurs in the country, this is what it is all about, and this is what makes it worthwhile.
Well, thank you very much.